you're all here today to learn about how to get some money, right? So we want to introduce you to some of our panelists here and learn about some of the touch points throughout the journey of an entrepreneur, right? So oftentimes as an entrepreneur, we always need money to kind of move things forward. We typically start out by depleting our own personal savings and bank accounts. Then we kind of go into friends and family and beg, borrow, and do whatever you have to do to get that money. And then oftentimes we're kind of come to a crossroads on whether or not we're looking at taking on debt financing, or if we want to take on outside investors and partners into our business. And today we're going to talk about primarily some debt funding streams that are available to you here in Denver and learn about some of the differences and the nuances there. So with that, I'm going to kick it over to Rick Snyder, my colleague here. And Rick, why don't you introduce yourself and tell us a little bit about what you do and what role you play here in the Denver ecosystem.
Hi everyone, my name is Rick Snyder. I manage the Small Business Loan Program at DEDO. I've been doing this for 32 years at DEDO, and 7 years prior to that, I was in commercial banking.
Great, thanks. Guyton?
Hi everyone, I'm Peterson. I'm a commercial lender with Native American Bank. We're a CDFI bank here in Denver. I've been in small business lending for about 5 years. I've been involved in the Denver small business ecosystem for about 10. I have background in microloans, SBA lending, and most recently government programs.
Hi everyone, my name is Ryan Guyton. Any Colorado natives out here? Okay. Oh my gosh, what? No. Well, thanks everyone else that moved here. I'm a native myself. I work at Colorado Enterprise Fund. I'm a community loan officer there. We are a part of the CDFI nonprofit lending organization. We really primarily focus on helping the underserved community, whether you're a woman-owned, minority-owned, veteran-owned business. Doesn't exclude anyone, but we do have a mission to provide lending and access to capital for those demographics. Thank you.
Good afternoon, everyone. My name is Bonnie Watson. I serve as the CEO at Energize Colorado. Like so many people here, we are a nonprofit mission-based lender, so we help fund small businesses all over the state of Colorado. But we specifically focus on BIPOC, women, veteran, and rural-based businesses. My background, like so many, is I'm a recovering banker, if you will. Worked my ranks through banking. And then I got into the VC world, so I managed pre-seed equity funds, seed stage equity funds, ran accelerators. But as a fourth generation entrepreneur myself, my heart is really with the small businesses who are the backbone of the main street of Colorado and make them, why everyone comes and visits Colorado. So it's good to be here.
Great, we're honored to have Bonnie with us. She's been the CEO for a couple hours.
About 3 weeks, so don't cover me with too tough of questions.
Just throw her right into the deep end of the pool, but thanks for being here, Bonnie. And then our two special guests at the end.
Oh, special guest. I'm Kristin. Good afternoon. So I am one of the co-owners here with my partner Vivi of Convivio Café. Has anybody been there? Nice. Cool. We are Denver's first fully bilingual Spanish and English cafe, coffee shop. And we're Guatemalan inspired and women owned. We are the recipient of some funding from some of the folks on the stage today, the panel today. So we're going to share about that.
As Kristin said, my name is Vivi Lemus, and I want to ask, are any Guatemalans in the house?
Yeah.
Thanks for having us.
Great, all right. So Rick, let's start off with you and tell us a little bit more about the products that you offer and how some of these people might learn ways to access that.
So DEDO's flagship loan program is the Revolving Loan Fund, or RLF loan fund. What we offer is what's called a gap loan program. What that means is we don't finance 100% of a borrower's loan request. We will finance the gap that remains after they have gone out and exhausted all of their financial resources. If they have a gap, that's when they come to us and we will look at that project. If we can go up to 25% of total project cost. If it's a white male-owned business, 30% if it's minority-owned or female-owned. And if you're located, if your project is located in one of our target neighborhoods, we can go as high as 50% of your total project cost, or whatever your gap is in your capital stack, whichever is less. We also have some other products that we work with, SBA 504, SBA 7A, and we do that in concert with some of our partner lenders.
Great. You want to tell us a little bit about what's kind of the typical range of loans that you provide?
You know, typically, I think our average loan amount is anywhere from about $150,000 to $200,000. Where we're a little bit different from the other lenders is we don't have set rates. We're kind of, we'll price the project at what it can afford. So if we have a project out there that can only afford a 3% rate, we underwrite it at 3. If it can afford a little bit higher rate, 5%, we underwrite it at 5. So essentially what we're looking to do is ensure the success of the build of the project by underwriting it with terms and conditions that they can afford.
Great, thanks. Kelly, you want to tell us a little bit about your products?
Yeah, so, okay. Native American Bank is, I think, different from everybody else on this panel in that we're not a micro lender. Our minimum loan size is $100,000, but what sort of differentiates us from other banks is that we work with a whole slew of government guarantee programs. So imagine most folks in here are familiar with SBA. We do work with SBA 7A and 504 loan programs. But we also can do USDA guarantee programs for businesses that meet the eligibility for that program, predominantly rural businesses. And another thing that makes us different from other banks is our willingness to work with gap funders and partners like CEF and DEDO. I'm working on a project with Rick right now where we're able to use DEDO to help with the gap financing for a 504 commercial real estate acquisition project. So as far as banks go, we're considered to be more accommodating and working with a borrower through the many layers of getting their equity for a project. Our average loan size is probably somewhere between $2 and $4 million. We can do up to $5 million directly, but are happy to partner with other funders for larger projects beyond just $5 million. But a lot of folks prefer to work with us when they're looking for a commercial lender because we are a minority-owned, mission-driven bank, which is sort of a rare gem.
That's great, thank you. Ryan, tell us a little bit about yours.
So just think of us as everything that she does do. We don't do that. So no, in short, we are, most people know us as a micro lender. Colorado Enterprise Fund has been around for 45 years, but a lot of people don't know about us. We'll do loans as small as 1,000, but we've gone up to $1 million. But most people think that we're a small lender. We're not. We will do larger loans if it's necessary and if it's required. You still have to meet the same standards, but look at us as probably your most flexible nonprofit lender. We're not going to hog down on your credit and all those things, but look at it as holistic lending. We look at the person, the individual, and the business together to create a global understanding of the business. We have a plethora of loan programs, all the way from the city on down to local municipalities. We partner with a lot of the city and state as well, so we're open to the idea of connecting with anyone. We just want to make sure it's the right fit.
So Energize Colorado is probably the newest lender here. We actually started during the pandemic to serve gaps within the ecosystem. So if you had any experience with us, we were doing PPE, other initiatives, but we deployed over $50 million into the economy in the form of grants and debt for small business owners to help bridge the gap and survive the pandemic. About a year and a half ago, we decided to become a lender and are approaching our CDFI certification here in the next 2 years. So we're a newer lender. I guess you could be classified as a micro lender. I think the definition changes quite a bit, but we offer up to $75,000. Due to the funder that we have right now, our interest rates are probably the lowest of a lot of funds. So we finance between 3.9% and 8.5% right now. We don't have a minimum credit score, but we do look for derogatory information, of course, but it's not dictated on your score. And we both have collateralized and uncollateralized options for entrepreneurs. We serve all Coloradans at all stages of business, but just based on that check size up to $75,000, we're dealing with a lot of early stage startup businesses, if you will. I very cautiously use the word startup, but I mean, a new small business. And our primary, our dominated demographic right now in our portfolio is women and BIPOC owners, and our smallest is rural and veteran owners.
Great, thank you. And I'm going to do my best to translate as we go throughout this presentation because you're going to hear a lot of acronym soup. So CDFI is Community Development Finance Institution. These are the best way to look at them as alternative finance institutions to traditional banking institutions. All right, so Kristin and Vivi, will you mind telling us a little bit about your journey on this, building your business and kind of the steps that you took to position yourself to take on some capital?
Yeah, we are coming up on, we just had our 3rd anniversary for signing papers with the Secretary of State, Colorado, thank you. And then we're coming up on our 1st year anniversary for our brick and mortar. So, not every startup is kind of the brick and mortar style, but our journeys, our backgrounds were in nonprofits, that's where we met, and so that was a lot more of the financing and funding experience and expertise that we had, and that's actually how we found out about Colorado Enterprise Fund, because they were funding some kind of social enterprise projects. I think, we had to do a lot of brainstorming. We literally made a vision board that we were looking at earlier today. And a lot of, dreaming. Honestly, this was in my head for like 10 years before we sat down and then kind of like put it on paper. I started a business plan. I took a class with Mi Casa Resource Center because I was like, I need somebody to tell me what the first step is. I literally have no idea. And when I would talk to somebody about a project like this, they're like, well, I need $500,000. And I was like, what? Like, I'm a middle class person. Like, I have no access to $500,000. So it was a long journey in that sense. I think the first step was attempting some kind of business plan. So I took the templates from Mi Casa Resource Center and just literally started writing out like, okay, if you're going to build an average coffee shop, you need this many refrigerators, there's $30,000. If you need 6-month capital for 5 employees, that's X amount. So we started building out those numbers, and at that time, that's when we got introduced to Rick, actually, which was really early on in the process. We were not ready to get a loan at all, but I think just being introduced to like what is gap financing, and what is a CDFI, and what kinds of numbers are we talking about. So then we just, continued working, looking for an actual physical location. We were raising money through other means. We also kept our full-time jobs this entire time. And we had some really early supporters that gave some money to just be able to pay for like the meeting with the person who will then eventually give you the money. So yeah, first it was Rick, and of course, as he explained, that's gap financing, so it's like you have to have another kind of bigger lender, which for us turned out to be Colorado Enterprise Fund. So we got our first loan from them. They wanted to work with somebody else, which then Rick came in with the gap financing, and then we kind of sort of ended the financing circle with something called Mainvest. So I would really encourage everybody to look this up. This was a game changer for us. It's regulation crowdfunding, I think. It's like revenue share notes. So we raised from 77 community investors for as small as $100 up to, I think our biggest investor was like 3,000 or 4,000. But we raised $80,000 on Mainvest, and we share back those dividends through revenue share notes quarterly. So that was kind of, we had this huge capital stack, and when I think about the question of, our journey and where did we start, honestly, it was a lot of like, Rick, and then no, we're not ready for that, and then, ooh, we found a physical location, but we don't have the money. Okay, who's Colorado Enterprise Fund? And then reverse. So it was just a lot of like, kind of back and forth, which makes your relationship with the funders really important. If they have, Colorado Enterprise Fund is really great about having support and consultants and like extra resources for you along that path, so they can say, if you don't know what a business plan looks like, or if you don't know what startup funding looks like, here's a template that you can get started with. So that was really important. I've said a lot. What would you like to add?
I think that something that's key that probably isn't mentioned enough is just the power of harnessing community around us. Both of us are first-time entrepreneurs, and both of us had a very clear vision and idea. And I talked a lot about just having the guts to speak that out loud and see who might be interested or might recommend you to something else or somebody else that might help you knock on the door. As somebody who has never done this before, it's been a really vulnerable experience to say this is what I want to do. I have no idea how to do it, but I'll talk to you and see if you have something that you would recommend. So, yeah.
Great, thanks. And Rick and Ryan, just close your ears for a minute. So how was the process of working with these activities for you?
It honestly feels like Jenga, You feel like you have all this capital stack pieces ready, and then you don't know something that will take the piece out, so you have to reconfigure and how to do this. And again, as first-time entrepreneurs, there's a lot of lingo that we don't understand, and a lot of percentages that change with the day, and all these things that are variable. So it's not easy, but I feel like there's really good resources that if you're go after that and find resources, that is how you make it work.
Yeah, I think they all work together, as we've seen through, so they all knew each other. Rick knew the person that was doing our project at Colorado Enterprise Fund. So I think that helps. Having extra resources is really nice. I think CEF has been, because even after you close on your loan, we still receive those resources. So we have access to consultants around legal stuff, our lease, somebody to look at our numbers if we want that. So that's really helpful. I think I would just echo what Vivi said. It's really hard as a first time doing this, and from honestly a middle class background, there were so many things that I just have never heard of or been exposed to, and it's very fast. So they just expect that you would understand that or know that that's how it works. And this is our whole life, right? So it's really intimidating to kind of be here's all my dirty laundry. Will you give me $100,000? And then they're kind of well, we're going to change the percentage and blah, 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 and I'll call so-and-so, we'll talk to you later. I'm okay, I don't know. But overall, I would say it's excellent, and we're really, really grateful for the support and the hand-holding that we had along the way.
That's great. So, and that's why I'm here to translate all those technical terms. So this question is for our lenders here. So oftentimes we hear from entrepreneurs, right, it feels challenging to acquire financing for the business. They sometimes feel defeated. They don't really know how to align themselves. But there's another side to that story, right? So the lenders have their own challenges there. So I want to learn a little bit about some of the challenges that you have, whether that be finding enough startups or entrepreneurs or businesses to invest in, or analyzing applications, or deciding that you have limited funds and how can you divvy it up to the people that are out there. So share with us a little bit about some of the challenges that you face.
I'll start. I just want to go back to what Kristin and Vivi talked about. I think one of the qualities that you really need as a first-time entrepreneur or second or third-time entrepreneur is tenacity. That is the one quality that I think you must possess to be successful. Just kind of going back to their loan, we started out looking at a location over on Morrison Road in the Westwood neighborhood. Ultimately, that location didn't work out, and this is where the tenacity comes in. I told them, look guys, your numbers have changed, everything is different over on West 38th Avenue. I'm gonna need a brand new projections, your terms are changing, and they really, for lack of a better way of saying it, sucked it up and really, got the job done. So lots of props to both of them. The biggest thing I think, I guess advice that I would give entrepreneurs is, first-time entrepreneurs especially, is make sure you come to a lender with a solid business plan. It must be meticulously researched, well thought out, and not only is this needed by the lender to understand the project, it helps you understand what's that roadmap to success. You might find out as you're working through your business plan, maybe this isn't the right time to do this project, or maybe it's not the right product. So if you do a real honest assessment through the construction of your business plan, it's going to tell you if you should move forward or not. It will also, it is the most important thing that you can provide to a lender, is a rock solid business plan. So I'll just say that. One of the questions Michael posed was, what's one of the biggest problems we as lenders find? For me, I've been administering this program for 32 years. I'll steal a little bit of Michael's thunder. I would say this loan program is the best kept secret. And I don't want it to be the best kept secret. I want everybody to know about this program because it is so vital to those entrepreneurs that are non-bankable. And that's our target market, our startups and small business expansions that are not bankable for whatever reason. There is some deficiency in the project request, like they don't have enough collateral, they don't meet certain ratios. Again, those are the kind of deals that we're looking for, those non-bankable, hard-to-do deals. That's what HUD tells us to go after, are those unbankable deals that banks
Or
won't
pre-bankable.
touch. Yeah, right.
I like that term, pre-bankable. So I'm going to, just to bring everybody up to speed again, I'm here to translate. Denver's best kept secret was the session I held in this room a couple of hours ago. But Rick would be happy to know that we talked about his program. So it is a fabulous program. And I'm just going to chime in as somebody who coaches people through writing business plans. Have a real clear roadmap on how you're going to acquire customers. Right, the financial projections are probably less important to these people up here on the panels because they're going to massage the numbers anyway, the way that they like to see them. But if you don't have a clear roadmap on how you're going to get customers, none of it matters, right? So just having a space and opening the doors, just putting your name out there in the ether doesn't typically work. So you want to convince these folks, convince them you're going to get paying customers. So Kylie, anybody else want to chime in?
Yeah. Been on that with the commentary. We use a word, well, let me come up a little bit higher. The difference between banks and mission-based lenders is that and I'm picking on bankers, the only time that a bank contacts you is when you default. When a mission-based lender works with you, we provide something that's called technical assistance. You've probably heard us throw that word around. And that's a big piece in getting you funded. And there's a lot of technical assistance that happens on the front end, to your point, and on the back end, continuing, your usage of the capital. I think, a big thing that we see, to Rick's question, is there's lots of people looking for money, but there's not a lot of qualified candidates. And I would say 50% of the candidates we get aren't funding ready. And so we have to provide technical assistance to them to get them, over the mark to get the funding. And that can come in forms of, building my projections, being realistic about my assumptions. So often we see entrepreneurs come in and you're crazy. Your assumptions don't make any sense. How are you going to go from $100,000 today to $5 million tomorrow? Being realistic about those assumptions. Having a solid business plan is a big thing too. But even after you get funding, you know, helping with marketing, helping with sales, helping with finance, helping with credit, those are all things that, you know, we do and provide within our resources in our organization. And it's something that you need to leverage as an entrepreneur, especially a first-time entrepreneur, because you don't know what you don't know, right? And I think if like we're gonna give a piece of advice, test your product, test your service. Don't just test your business model. Come to me and show me that your product works, that you've sold it to people, that people like it, that you've gotten feedback from it. That's a really easy way to sell a loan committee on approving your funding deal.
Just a little bit, I know you got a question, sir. If you don't know why, you won't figure out how. And so literally, you have to figure out, it's not just a surface level why I want to do this, I want to quit my job because I'm tired of working with somebody. That works, but then when you realize that you have no stable income and you can't fund your business, now you're in trouble, now you're running to get funding, and we can't really help you at that point. So really dig deep and figure out why you want to train, like why do you want to build that dream? And then once you do that, please do not go chat GPT a business plan. Because it's easy to do that now. I watch my 15-year-old nephew do that, and I'm like, okay, the world's over. I don't know how we're gonna decipher this from a true business plan, so my ask is that when you're building your business plan, speak about what you're bringing to the table. What are you gonna do that's different from everybody else, because we're all trying to reinvent the wheel, and we have the best idea, and that's great, but why do you wanna be the one that's gonna make the difference? And that speaks to what we're looking for is character. Did you go the link to say, hey, I don't know this industry well enough, but I have experience here, here, and here that match this industry, and this is why I want to give it a shot. Not, I drove Uber for a little while, and this may be somebody in here, I'm sorry if it is. I drove Uber and now I'm trying to do trucking and freight. Like, that is two different worlds, but I commend you if you could do it. So just really hone in on that why, and then once you do that, now you know how to do it, and then we can work with you from there.
And we're going to take questions at the end, so Kylie, did you want to add anything to that right now?
Yeah, I think I would just echo Rick and Ryan and Bonnie's importance of having a solid, vetted business plan. You know, don't let the first reviewer of your business plan be your lender. Share it with other entrepreneurs, share it with mentors, get feedback. Use all the tools available to you to prepare that. IBIS reports. For all of you in Denver, Denver Public Library has a business librarian who can meet with you to use the BizBoost service to get amazing data on how you're going to make those first sales. It tells you who your clients are in your market. So data in your business plan, but what's most important is that you understand the information in there. So if you work with somebody to put together a cash flow forecast for your business plan, it's really important that you understand those figures yourself and understand the give and take of those expenses and revenues, and be able to kind of stress test those numbers yourself. And I think something that a lot of folks do is go to their lender as you would do with a consumer loan and ask for, you know, how much can I afford? What's the most I can take out? And that's the opposite of what you should be doing when you're seeking a business loan, because you are the master of your own business and you know what the cash flows are going to be. So it's really important that you put together those projections and know what you can take on, and go to a lender, you know, here's my future cash flow issue, or here are my startup needs. I think I'm looking for a working capital line of credit for $150,000. Don't let them make that decision for you. Be the master of your own destiny, if you will.
That's great. So, again, I'm here to translate. So Kristin talked about laying out her dirty laundry. The finance folks up here refer to that as due diligence. So we can talk a little bit about that in your process, and also kind of educate us a little bit on the time frame from an application, a qualified application, to the time of funding, because a couple of you have said it already. If you needed money yesterday, it's a little too late to come talk to us, right? So talk about that in the process, if you will.
I'll go straight for it. Now, we've changed our processes a lot in the last few months to better help serve the kind of the smaller tier loans, the micro loans, 50,000 and below. So that's completely changed. But when we're talking about 150,000 plus or 100,000 plus, you're looking at closer to 45 to 60 days to get funded. It could always be sooner than that. It's really dependent on your ability to get us documentation back in a timely manner, and it's actually well put together. It's not just you throwing some stuff out there and hoping that it's going to stick. And so, once again, it just depends on the amount of financing. Typically, the larger the loan, the more documentation we're going to require. So if you're not used to it, we're never going to know. So please communicate, hey, I've never heard of this. And we have the ability sometimes to write that off or take it away. And if we don't need it, we won't use it. But oftentimes, if you're getting it requested, it's because everyone above us that gives us the financing to deploy, they're going to ask it from us. So it's never to make it a more difficult or bogged down process. It's just necessary documentation.
Yeah, so just due to the size of our loan, up to that 75,000, we have the ability to work very nimbly through the process. So our application to funding time is about 14 days. But I always kind of caution entrepreneurs, they'll be like, oh, this process is taking a long time, like this is never going to happen. Imagine you giving me $300,000. You're going to make sure that you're risk mitigating that money. And so just kind of put that, yourself in those shoes. So I always remind people of that. But also be aware that, things always come up in review and underwriting in committee, and it's unlikely to be within that time frame. So just prepare yourself for, potentially a drawn-out process. Lending today, especially in this economic environment, we're doing a lot more risk mitigation on these loans, and so you just need to prepare yourself for a pretty thorough process as you go through these application processes.
And I would add to that, being that the majority of the small business loans that we do at Native American Bank either have a government guarantee through the SBA or working with a SBA lender like we say Capital for a 504. And so, like Brian said, once we have a complete application package, a solid set of documents to look at, from there it's about 30 days for us to have a decision, and then we can proceed to getting the SBA's approval or passing it along to a CDC, which can add 60 to 90 days to the project. So if you're looking to use an SBA loan, you need to, build that extra lead time into your timeline, especially for a commercial real estate purchase. It just takes longer to get through the SBA approval process, and your lender, be that Colorado Enterprise Fund or a bank, has no control over the SBA's timeline, and so it's always best to be looking for, building the relationship with funding partners and thinking about financing before you need it, especially if you're looking for a working capital line of credit. Be prepared for that 6 months to a year before that cash flow shortage is going to happen, because nobody is going to lend you money when you can't pay it back. So be prepared for having access to a line of credit to help you through those cash flow shortages and keep things running smooth before you need to, because that timeline could be anywhere from 60 to 90 days to get through a loan process.
So unfortunately, DEDO's loan program is a federally funded loan program that is administered via local government. So with that in mind, it is probably going to take us from a completed application to loan closing about 120 days. The flip side of that.
He was waiting for all the air to get sucked out.
The flip side of that is that I would claim we probably have the lowest interest rates available through our loan program, and we don't charge any loan origination fees. So we got that going for us.
Patient pays.
So,
Pardon?
Patient pays. Patient pays.
Yes.
patience pays. So, great. So thanks for that. Again, just a couple more definitions. SBA, right? Small Business Administration. That's a federal agency that provides basically an insurance policy to the lenders up here. So if the loan were to default, they're protected a little bit. 504 is real estate. 7A is operating capital. Did I get that right? Okay. So, so that's what that's about. So, okay. So now we've gotten money, right? Things are good. Life is easy, right, Kristin and Vivi? Life is easy running the business, right? What's some of the challenges that you're currently facing post-loan closing?
I'll let you take that one. But I wanted to follow up on the timeline thing just from an entrepreneur's perspective. Like, it is so complicated because each of the processes that each of you described, if you're doing the capital stack, right, where you're finding multiple funding sources to get to the total that you need, which is what most people have to do.
She learned that term during the process.
I did learn that term during the, and then I was like, Shark Tank, I get it. But you, all, so we have to operate on all these, 4 different timelines. Then you've got your contractors, who might be on a totally different timeline, and materials might be on a totally different timeline. Then you have your landlord and your lease. So like, honestly, for 9 months, it was a lot of like step back, step sideways. Like, and we didn't, I think this was mentioned at the beginning, but some people, I think their journey is like, maybe you have a large amount of savings, or you have an early investor that's just like, hey, I'll give you $50,000 to just kind of figure out what you're doing and pay yourself time to do it. We didn't have that, so we had to keep our full-time job the whole time, and then like, I don't know how to say this really clearly, but I think this is something I wish that funders, I know you know it, but it's like you have to kind of have money to get money, and that little like period is so tricky because we needed money to sign our lease, but we had to have our lease signed to close our financing, and we needed money to get construction started, but we needed the construction contract to be signed before we could close on our financing. So it was just a really stressful time, but we made it through, so.
I think this is something that's, pre-bankable, makes a lot more sense, especially when you are a truly small business that would not walk to my nearest bank and ask for money, because of course we tried that and it didn't work. I think one of the challenges that I feel like we're facing, and it touches back on something that you mentioned. It's like knowing what your non-negotiables and who you are as a small business. Because I feel like if you know what those like essential things are, then your vision is very clear and you know what to say yes to and what to say no to. Especially when you're starting and you want all the money. I feel like you can get into this like headspace where you're like, yep, we'll do this and this and this and this because we need this. And then you lose your objective. So I feel like it's been super fun to be an entrepreneur, super stressful. I have way much gray hair than I had before. But I feel like just knowing who you are and how you're gonna stay the course. And as it was mentioned before, like we had this very specific neighborhood targeted, and we're like, we're gonna be on this neighborhood and do this, and Guatemalan inspired, bilingual space, like we're knowing where we're sourcing from, we're buying directly from farmers. We know all these things, and then we realize, whoops, we can't do this in this neighborhood. Does that change who we are? Well, no, we're still, making sure that producers get the attention, the value that they deserve. We're working with farmers in Guatemala. We're buying locally from East Denver Food Hub and all these things that were gonna be close to our DNA. But it turned out it was the wrong neighborhood. So we had to change the language about it. But I feel like keeping that focus on what you want and what that vision needs to be, is like, that is gonna be your target, and that's one of the challenges.
That's great. And I'm just gonna chime in on that term pre-bankable. I always say unbankable. are not yet bankable, is what I typically say. And that's sometimes, and thank you, Kylie, for being here, because sometimes on these types of panels, the bankers get beat up. Because it's typically harder to get a bank loan, right? But there's a reason for that, right? Because I would say bank money is good money, right? Sometimes the rates are better. Sometimes they're there primarily to help you build long-term relationships, right? They want to be in it with you for the next 10 plus years potentially, and help you continue to grow that. So please don't beat up on your banker. They're good people for a good reason. But if the lenders could share a little bit of their experience with either positive outcomes, stories that you want to share about lending successes you have, but then also kind of chime in a little bit about where you still see businesses struggling past funding, right? Because we know that happens. And then things that you might recommend to them as far as going out to seek resources to help them with that.
I'll start if you don't mind. Well, I think a perfect example is Kristin and Viv and all the obstacles that they had to overcome. I mean, wanting to start out in Westwood, that kind of blowing up, and then going to West 38th Avenue. They had so many challenges, and again, I have to give it up to their tenacity. If you're not tenacious, you're just going to die on the vine. You got to hang in there. One of the really cool successes that I think that DEDO has had is we had a loan request for a beer spa, and if you're familiar in Europe, they have them all over the place. But this is a relatively new concept to the United States. In Colorado, there's nothing like this, but it is a spa where you get into a hot tub with beer. And I can remember lots of my loan review committee members looking at me like, this ain't gonna happen. And it has turned out to be one of the most successful loans we've ever done. In a neighborhood where you think it would not be successful, over in 5 Points at 30th and Downing. So one of the most incredible success stories. I hope I just didn't jinx them, but they've been in business now, I would imagine, what, 4 or 5 years, 3 years, something like that.
I did the ribbon cutting there in 19, I think.
Yeah, so that's a project that we're really proud of. I was going to say, one of the biggest challenges that I see with a lot of small business owners is what Kristin and Viv just told me about earlier today, and that is small businesses that are leasing space. A lot of times you're finding your landlords don't want to renew their lease, or they're selling the building. And to me, that's been one of the biggest challenges that I think DEDO is facing right now, is that space is expensive. You find landlords that are kind of moving out old tenants for better paying tenants, if you will, or building owners selling their buildings and forcing their tenants out. So this has really become a challenge, I think, for a lot of small business owners.
I've done a lot of work in Southwest Colorado, so like the Telluride to like Norwood, Redvale, Natarita area, if you're familiar, right outside of Montrose. And I had a gal come to me, her name is Sadie Farrington, and she said, I'm a female butcher. And I was like, okay, well that's so awesome. And she walks in and she's like 5 foot tall, and she's a butcher, and she's like cute, petite, and I'm like, you want to start your business in Telluride, that's amazing. And we funded her, and she put her butcher-based business on a subscription business, and she's thriving in the area. We've done other things, such as help a grocery store in Natarita, Colorado, continue to provide food to a desert, a food desert in a small, very rural community like that. So a lot of cool success stories around that. I think one of the biggest challenges, and we were just talking about this, is I used to run an investment boot camp with the Telluride Venture Network, and the investment boot camp is all about equity and getting equity in the door and whatnot. And this was the first year that I ran that boot camp, and they asked me, okay, so what's my equity method right now? Like, how am I going to raise equity? And I was like, it's called revenue. And they're like, no, what equity am I going to raise? And I said, it's called revenue right now. And the markets are tough. Equity's hard right now, debt is hard. And so I have a rule that I've worked with entrepreneurs. It's 70% of your time needs to be focused on raising revenue in your company. I say raising revenue, earning revenue, creating reoccurring revenue that's stable, non-concentrated in your business. The other 30% of your time is fundraising. Finding debt sources to extend your runway, to break even if you're not there, finding equity if that's the name of the game for you. And I think another thing that I hear quite often is, well, where are the grants? And I've heard it several times at Denver Startup Week this week, like, I'm interested in grants. That's the wrong mentality as a for-profit business. Grants were created as a nonprofit for nonprofits to fund us. It's very hard to find grants for-profit businesses, and if you do find it, they're highly competitive. They take a lot of time, and your likelihood of getting funded is very, very slim. So revenue, first, and then work through the funding options on the back end of that. But that's a big piece that we're talking about right now with entrepreneurs.
Yeah, I'm glad you brought up grants, right? A lot of people, again, are looking for grants. Remember, grants are a taxable event into your business. Interest that you pay on debt financing is a tax write-off, so think about it long-term from that perspective. So anything else you want to add, Ryan?
Yeah, I'll say this. I don't want anything that Convivio has experienced or anything that we're saying to disrupt your ability to move forward as a small business owner. If you want something that you've never had, you're going to do something that you've never done. So you're going to have to dig deep. You're going to have to find the time outside of your work. You're going to have to find the time outside of your family. If it's really worth the time, you're going to have to dig in even more. I know I'm an entrepreneur, so I know how it is. I have a 2-year-old daughter. I don't know how I have the time to even be here right now. So it is just a matter of finding your inner self and digging deep there. As far as success stories, honestly, we have a ton. These ladies here represent a true pioneer movement, if you will, in culture and bringing flavor back to a place I've never even thought of even experiencing that. So thank you for that. There's Rosebud, amazing ice cream. Please check it out. I think they're in King Supers now. And then there's a co-working space, if you will. It's called Green Spaces. One of my good friends, Javon Taylor. Dude is a pioneer. He's on many companies, but check it out. Just a few little plugs for folks, but anything that I'm seeing now is that most business owners, as you start up and get ready, this is a misconception. At 2 years, I can go to a bank and get financing. Please don't think that. Like, yes, they say 2 years you're existing, but if you did not create revenue, if you didn't really build a product or service, you go back to that bank and they're gonna say, hey, sorry, I'll give you a credit card, and now you're deflated again. So really dive in those first 2 years of business and really dig deep there to make your service tractable to the market, whatever that is. You behind that product is what makes it. The product itself is just a product. Now, how do you bring that to the table?
Yeah, so by a show of hands, how many people in this room know that it takes about 15% owner's contribution in equity towards a business loan? All right, so pretty small number. It's not a hard and fast rule, but it's usually between 10 and 20%. So while you might be able to get a personal mortgage on 97% of the debt of a property, you're looking to only be able to get a commercial mortgage on 75 to 80% of the debt. So, or of the cost of the property. So I think that's, in my experience, the biggest hurdle that entrepreneurs face is coming up with that equity requirement, and it can typically be demonstrated in a number of ways. So showing the cash on your balance sheet, or in the case of Vivi and Kristin, documented costs that you've incurred towards the project. But I find that folks are really surprised about how much money you have to contribute to get money to grow your business, and that ends up being one of the biggest hurdles that adds time to the funding timeline. And that's where it's great to know about the programs like the Energize Colorado Gap Fund, the number of products at CEF, and then of course DEDO's revolving loan fund. We're working on a project with DEDO right now, as I said, where the borrowers were purchasing and renovating commercial real estate, and to convert a mortuary into a Montessori school, the borrowers needed to come up with about $500,000 in equity. So that came from a source or a combination of loans from their 401ks from their time in corporate USA, from friends and family, from intercompany loans from other businesses they owned, and then it definitely wouldn't have been possible without the support of the gap funding from DEDO. But I mean, these entrepreneurs had to scrape all of the sources that they could to come up with that equity requirement. So I think, even existing businesses that have been really successful in their first 2 to 3 years, as you're growing your business and you're profitable, hopefully you're investing that money back into your business, and it's really hard to come up with that equity. So it's just really important to be thinking about that as you are in those growth stages, so that you are retaining some capital to be able to secure financing, and also just building relationships with a variety of funding partners in case you do need to get creative with that capital stack.
Great. All right, we got time for just a few questions. So do you still have your questions? Or?
Yeah, so it sounds like the project what we talked about a lot is minority or women. What about like myself, right now, like myself, and it doesn't have a physical location. I heard a lot about real estate, construction, and all that, landlords, that kind of stuff. So a business that operates primarily on B2B, I haven't part of it, like I said, I've been in the same industry. You guys offer all unique, variants of types of ways to market. What do you suggest someone like me that wants to get $1 million? And I am banked, and I do have good resources, traditional resources, but what the four of you on stage, what would be the best course of action? And I am early start.
Great. So I'm going to repeat the question just for the audio on the recorder here. That's okay. So we have a seasoned entrepreneur here who doesn't meet the BIPOC classification that's been mentioned several times up here, and he has assets and resources. So where does the panel recommend that he go to look for funding on his new venture as a successful entrepreneur that has successful exit?
I feel like this is as good of a time as any for me to mention that Native American Bank is owned by tribal nations and tribal enterprises, but we lend to anyone. You do not have to be a part of any protected class. I think about 72% of our loans do go to underrepresented, underinvested communities and people that identify is underrepresented, but that doesn't mean that we couldn't work with you. I think what your loan request is going to come down to is collateral. So I think that's another thing that folks often don't consider, just from lack of knowledge, is that the personal guarantee for a business loan is often going to look at a deed of trust on your personal residence. So that's sort of one way that you can collateralize, at least in short, a $1 million request for an early stage business.
I'll say for us, it's not that we don't lend to outside of those demographics, but again, it's our primary focus because historically it's much harder truly for those demographics, underserved communities to get traditional financing. So it doesn't mean you in particular, just nationally or historically, it just hasn't worked for women-owned, veteran, or minority-owned businesses. We will lend to anyone though. To your extent though, $1 million loans of that size, it depends on what we're doing. A lot of our lending is providing impact. So are you creating jobs? what are you doing in the community? And so that's gonna impact our ability to look at it. And if you do have assets, if you are, have a great net worth, you're not our best client, to be honest, because honestly, you're bankable in some degree. I would say SBA will probably be a good fit just because they can guarantee a little bit of that.
Great, thanks. Gentleman over here.
Hi there, I'm Tony. When you think about your borrowers and like potential blind spots, what are some, we'll say, miscellaneous expenses or unanticipated expenses that you see common with your borrowers that, hey, I need $200,000, but I didn't realize I actually needed $40,000 for insurance or whatever it is.
Yeah, so the question was around basically cost overruns on projects, unforeseeable expenses that it wasn't calculated, so.
Well, it's hard to say because it's just dependent on the deal, but I guess a rule of thumb that I would use is take your budget that you think you will have for the project and add a 20% contingency on top of that and ask for that amount. I mean, the form of overrun can come in any, if it's construction, doing a cafe, I'm sure you experienced that, but I would just say rule of thumb, 20% contingency on top.
Great, right here.
Yeah, quick one on collateral back. So we talked about needs and primary residence. You guys ever worked with more creative quotes and collateral? Mind on that. It's kind of a hard from just a house to build.
So questions around collateral and basically creative forms of collateral other than maybe a personal residence or something like that.
Especially as like an early stage business, a really common tactic is an assignment on a life insurance policy. So that's commonly used by the SBA. Say you're looking for $1 million loan and you're able to pledge a lien against some equipment for $100,000, the SBA would likely ask for an assignment on a $900,000 life insurance policy. Of course, that's can only be used in the worst situation, but it is one way that they will get more comfortable with a deal. Working with a bank, such as Native American Bank, and not every bank does this, but we can use cash collateral. So if you do have access to a trust or maybe an investor who wants to be getting some sort of return while providing support for your new business, we can hold a cash CD as collateral for the project, which is a unique way of doing it. We work in Indian country, so we've kind of seen it all. We've done some really creative collateral with sort of future contracts as well. So I think depending on the type of guarantee program, they all have requirements. They all have their own unique requirements for collateral. And those are just sort of the standard go-to options versus a deed of trust on a personal residence. Typically, if there's 25% or greater equity available on the personal residence, and then an assignment of life insurance, cash collateral, or sort of using future contracts.
Great, I'm sorry we're out of time, but yeah, I think if you bum rush the stage, you can corner these individuals and not let them escape the room. But thank you to our panelists, and thank you all.